What's up, guys? I hope you're all doing well. So, I'm finally back, and I'm back with yet again a new video. I expect this video to be long enough. So, yeah, be sure to get ready, especially mentally. I have a lot of topics to cover on this video, so I hope you will get a lot of value from it. You will benefit from it hugely. Okay. But before we get into the video, I have something to say to you. So, um, my DMs in the past 2 weeks were literally on fire, and I appreciate you guys reaching out to me so I can explain you some things that you don't really get to the fullest, or you're struggling to understand, or you're struggling to see them on the charts. Okay, or you want to see what I have drawn out and why did the price react from that zone or from that zone. Okay, um but there may have been a problem occurred that I haven't seen your message or haven't yet answered it. Okay, I will make sure that I will answer all of them in the next couple of days. I was just extremely busy and I couldn't afford myself doing some trading related things that often. Okay, so yeah, excuse me for that. But yeah, this video will cover a lot of topics, and the majority of them will be actually the ones that you have asked me, or at least the ones that I have seen you writing me, and they will be on entry criteria or requirements I use as supply to demand and demand to supply flips, um, chalks. Um, Here I will not go into the details. I will just, you know, say a thing or two about chalks, demand and supply chains, and I think the vitalist part of the trading, higher time frame structure, and weak highs, weak lows, strong highs, strong lows. Okay, so we'll start from, in my opinion, the most important part of trading is higher time frame structure or overall structure. Okay, so it's always great when you are, as a beginner, understand that there are three types of market: bearish, bullish, and ranging. But the part that beginners often suffer from is that the structure on the market doesn't seem that easy to understand because more often than not, the structure doesn't look like so. Okay, it looks more like, oops, I don't know, something like this, and then, you know, whatever, something like this, like, with complex pullbacks, accumulation of liquidities, sweeps of liquidities, breaks of structures, both to the upside and to the downside. Okay, so this one is more complicated version of structure, and it's always important to understand it to the fullest because whenever you're on the right side of the market, um, that means that you will capitalize on your on your trades. Um, okay, and you will be in profit. So that's really important, and you will not become the liquidity. Um, so the first reason why we always want to know the bigger picture, or um, why we want to follow the higher time frame trend, is that the higher time frame trend, which is like 1 hour, 4 hours, or even daily, or even weekly or monthly for you, is that these trends, or this one trend, doesn't change that often. Okay, so in 15 minutes, 5 minutes, 3 minutes, and 1 minute, there is a lot of noise. There are a lot of structure breaks or substructure breaks or minor structure breaks. constant uh, sweeps of liquidity. Okay, some fake outs. I don't know. A lot of things happening out there, and the trend, even on 15-minute time frame, can change 3 or 4 times in a day. Okay, and it's really hard sometimes to keep up with lower time frame trends when you don't know the bigger picture. Okay, you always want to be on the right side of the market and to follow the trend because the trend is your friend, and it's easier, as I said, to capitalize on the one pro trend big move than to go against the trend and to suffer some losses and all that. um so yeah, as you can see, we're now on euro US dollar, and we've been lately like heavily bearish, and we are still bearish in my opinion. We just ranged for I don't know how many, 1 month or whatever. um but yeah, we'll start from weak highs and lows and strong highs and lows concept. So the weak high or the weak low is the high and the low respectively that didn't break the low and the high. Okay, so in this case we're in a bearish trend, so that means that we're constantly putting lower highs and lower lows. So that means that lower lows are getting broken, which then means that the lower highs are actually strong because they're not going to be broken. Okay, so as you can see, this low get broken. This is a lower low. This is lower high. Break of structure to the downside. Now we have retracement. We fail to break this high. So that means that this low is now weak. That means that we can now anticipate this low to be broken. And we do break the low. Once again, retracement. Yeah, we close above this point of structure. But for me, actually, this is a pause in the market, okay, and then a continuation. So the realist swing high till this moment is here. Since we failed to close above this high, this low is now weak, okay, and it gets broken, okay. Um, we then have, as you can see, a new point in structure. Um, this is our low. As you can see, we fail to close above this high. So this low is now weak, and we break it once again here. And in this situation, you can see that there is a chalk, of course. But as I have said, this is some range, and of course, I have marked it out as a strong high, but it has eventually got broken. Okay, which means that this low, or just for some time, this low is now strong, and now we have a momentum shift and a substructural trend change. So we broke this strong high, which means that this is now strong low. We have put the high in here, but we fail to break this low, which means that this high is now weak. It will most likely get run. As you can see, the price does so. And then, as you can see, the price fails to break this low to this point, but we will get there too. So this is now a weak high, which gets run successfully in here. Okay, so you're probably wondering, like, why is this not a low? Um, so as I said, this is more of a pause and a mitigation of this supply, which did show a reaction just for one purpose. Okay, we will get to the more in detail advanced explanation about it a bit later in the video, but briefly saying, we have now supply failing, which means that the demand is in control, which then means that the demand supply is building, the demand chain is building. So by the demand chain, I'm actually saying that something like this, which will look like a staircase is building. Okay, let's make it a bit faster. My bad that I didn't really get it done before the video, but yeah. So we have this demand chain building, and it means, of course, that the supply in here is failing over and over again. Supply is in control. Demand is in control, uh, and demand gets respected. So this is a chain that we anticipate to continue until some higher time frame um, supply gets mitigated, and then the price does this thing. And if you're probably wondering why will it do so, well, because we have here a either trendline liquidity, you can call it, or an internal range liquidity. Okay, so yeah, I'll delete it. The thing that you really need to understand is whenever the higher time frame supply in control is right, but on the lower time frames the demand prevails the supply, that means for me only one thing, that the demand accumulates liquidity below it. Okay, so the demand builds up liquidity in the form of trendline or so-called chain or so-called staircase. Okay, just for then to mitigate the supply and for supply to have sell side liquidity to target and to move the price lower. Okay, so this is the same situation we have in here. We have supply demand chain building liquidity, as I have said, in the form of a trend line. You can like mark it out this way or this way. It doesn't really matter because, as you know, probably we swept it all the way down here. Okay, you see this low, got swept. See, why has that happened? Well, because this is what actually a complex pullback looks like. We have this extreme swing high, which has a lot of imbalance to fill, that has broken the point of structure, that has swept the liquidity, and there is big void to be filled, to get filled. And as soon as the price comes back to the supply, we mitigate the supply. We then, as you can see, sweep the liquidity. See, so sorry. As you can see, this week is a bit higher than this supply, so we sweep the liquidity, which means that we don't really need to go higher than that. We can drop from this moment on. And yeah, I marked this circle out just for one simple reason, is that we have a clear order block either in this week, right, or this last bearish candle before the bullish up move. But why does the price ignore it? Well, the first reason is that it was actually the news order block. So in most cases, in my experience, right, the news order blocks will fail. Um, and the second reason is that we are actually coming off the higher time frame, strong high, strong supply, and we are overall in a bearish trend. So that means that we now will target this internal, oh my god, sorry, uh, internal range liquidity like this, okay? We have a lot of sell side liquidity to sweep, and the price does so, okay? So this now, once again, a strong high, and here we see the reaction and a little retracement. But this low fails to break this swing high, so it's weak and will most likely get red. Okay. Um, so I hope the explanation about strong highs and lows, weak highs and lows is clear. If not, feel free to ask me about it in the community, right? Or reach out to me on the social media, right? But then I have drawn the little, I don't know, explanation about what has actually happened, right, in this Euro USD pair, and I will send a picture of it to in the community, so you don't need to make a screenshot of it. So yeah, as you can see, we have this extreme supply and then a clear um, bearish order flow. Okay, we're constantly breaking demands and weak lows, and strong highs are prevailing. Demand is prevailing. Okay, but then we get a supply to demand flip and a chalk. Okay, returns back to the extreme demand to mitigate and then to continue the move. Why does it so? As I said, to accumulate the trendline liquidity or internal range liquidity, um, and to sweep the liquidity that is above this three highs. Okay, so we had a pretty big void there, and we swept it. We then mitigated the extreme supply and then pushed back down, sweeping the trend line liquidity or internal range liquidity, right? And in this case, the target will be the lowest point of the so-called bearish trend. Why? Just because whenever one piece of the supply or demand chain gets broken, the following are actually more likely to get broken as well. Okay. Moreover, there are a lot of questions in the community that the people don't really understand what order block to pick. Um, so we have always two types of order blocks: decisional or the extreme. Extreme is always the one that is the lowest when it's demand or the highest when it's supply. Decisional is the one that has actually flipped the supply to demand. Okay, so just before we get into the supply and demand flip or demand to supply flip, this is how I personally use this. So if decisional order block didn't sweep liquidity, I will not take it because of a simple fact. If OB doesn't induce, it will be induced. Okay. I have posted I think 3 screenshots on this topic, on this subject. And yeah, this is the theory that I am still testing, so I didn't really make the video on it just yet. But yeah, as soon as I will be finished, I will do that. So yeah, but in this case, the second case, I will take the setup from the decisional order block. Yeah, so decisional order block induced, which means that it has taken the liquidity. So it doesn't need to come lower to take the liquidity because it has already grabbed it. In this case, I will take this setup. Okay. So yeah, it is clear and clean. I don't really know what to add to that. Whenever decisional order block fails, I will still, as I have previously mentioned in my videos, take the second entry from the extreme order block. Okay. Um, so yeah, that's that's the thing pretty much. Um, what I also recommend a lot of people to do is, to trade the reaction. So um, I have seen a lot of chart chart markups where you have like tons of POYs marked out, and you're pretty much uncertain from which POY will the price react, or will the price bounce back up or back down. Okay, and in this case, what I recommend you to do is not to expect or simply to put the order on this or that supply or demand, but to wait for the reaction and then to go from that. Okay. Um, so yeah, I will explain it in details whenever we get to the charts. Just for now, we're staying with this diagram. Okay. Um, so the question that I have marked out for me as the most important one before I get into the trade is who is in control. This question you should be asking yourself all the time you're thinking about getting into the trade. But what does this question actually mean? Price always has a reason to move, and we know that price moves from supply to demand or vice versa, from one mitigation to another, from one side of liquidity, like buying side of liquidity to sell side liquidity, to another, or vice versa. Okay. Um, in order to successfully execute trades and to be on the right side of the market and not to become liquidity, you need to understand that the answer to the following question: who is in control or who prevails now, supply or demand? Moreover, since the market is fractal, we want to align the time frames lower to higher in order to increase the probabilities of trade playing out in our favor. So, sorry, if you didn't really get it, um, align the time frames. That means that if 1 hour or 4 hours time frame is bearish, we want to see the same picture on 1 minute or 15-minute time frames, um, namely a bearish trend. Okay, and vice versa with bullish. Then we go look at the bigger picture. I'm sure you have heard this saying multiple times, but for those who are still unsure, what does that mean? Here's the explanation. As I have actually said it in the beginning of the video, higher time frame trend rarely, oh my god, rarely changes. So it will only be right to follow it until it ends, right? We want always to follow the intentions of higher time frame or simply saying following the order flow trend. Trend is your friend. So in this situation, I like a lower time frame trend with higher time frame trend. They're the same, then look for the continuation then. Okay? They're different. Ask yourself where the price currently is and what it is doing. Is it retracing or not? Is it in the EQ, discount, premium zone, and go from there. So yeah, I hope this diagram will somehow help you. Okay, just to make the video a bit faster, we will now get to supply and demand flips. So, uh, if you're new to trading or you're struggling to get the idea of the supply to demand flip, is it's pretty much when we have, for instance, a bearish trend, but then we have the first break of structure and the second break of structure. Okay, so in this case, the supply was in control because we were constantly putting lower highs and lower lows. Let's do it this way. Okay. Demands were failing over and over again, but then we broke the supply, the last supply that has broken the demand in here. Okay, so we broke this supply, which means that it creates a new demand either at the extreme in here, right, or as I have said, a decisional order block demand, from which we then want to buy. Okay, so this is a supply to demand flip. Supply to demand flip. This is the supply to demand. Supply gets broken, which creates two demands: decisional order block demand or extreme demand. And then whenever the price comes to either of them, you either wait for the reaction, or you can simply see whether this or this order blocks swept the liquidity. If not, then move on. Okay, so this goes with bullish trend too, but vice versa. Demand gets let me actually show it. We have a bullish trend. So the demand is respected. Um, but then it gets broken by either this supply, which is extreme, or the decisional supply. Oh my god. Or the decisional supply. So in this case, this is the supply to demand flip, or you can call it like demand to supply flip. Doesn't really play a role here. Flip, nope, flip. Okay. So this means then we react or sell either from this supply or this supply. It really comes to the reaction from either of this zone. Okay. So this is pretty much the supply to demand flip. The concept that I don't really use, and I don't really like I saw some people actually misunderstanding the supply to demand flip with a, I guess, breaker block concept. I hope I got it right. So breaker block concept is whenever we have this situation when when the demand gets broken with big bearish momentum, which then becomes the supply from which we sell. So it will look something like that. Okay. I don't really use it, but yeah, this is not a supply or demand to supply flip. Okay. So yeah. Um, yeah. Next. Now I really want to get into the explanation of my entry criteria and some clear things up about chalk. Okay, so whenever I am going against the trend, which means the trade is going to be counter trend, and the price comes into the POI I have selected, I want to see either a 5 minute or 15-minute chalk. Okay, so that means that I want to see a sweep of the low and the sweep of the high on the 5 minute when we are going from bearish to bullish. Okay, so in this case we see a perfect example. This high, this low gets swept, which then goes to the sweep of the high. Okay, so this is our chalk. In this situation, since there is no clear order block, I will be waiting for something more clear. And as you can see, we actually then break the structure in here. So we now can mark the structure out. So this is the structure, but we then break this point of structure in here, which means that now our high is here and the low is here. From this point, you can clearly see that the momentum comes in. Oops, not that. The momentum comes in, breaks the previous lower high. So we can now highlight this order block, and yeah, we can just put buy limit order, and as you can see, it will then play out in a hell of a great RR. Okay, so this is my entry requirements for the counter trend trade. So the price gets into the POI 1 hour or 4 hour when the 1 hour is not clear. Then I'm waiting for 5 or 15-minute chalk, and then I'm waiting for some clarity. Like if the price action is not clear, I'm either staying out or I'm waiting till the price action gets clearer. Okay. Now let's get to the entry with the trend. So let's get to 15 minutes actually. We have this retracement break of structure, and here I think it was news. I'm not sure. I didn't trade this week a lot, So yeah, but we still have this clear demand zone, which has some inducement here. So we can potentially buy into this supply area, just with also these highs where there is a lot of liquidity. Okay, but what the price actually does is impulsively breaks the demand, which creates a supply. And in this case, this is a bearish candle, right? It's not bullish. The bullish is here. So we may be um, waiting for the price to come deep into this bullish candle. But this is where the inside bar candle comes into play. And as you can see, it's orange, which means there is a range, okay, a range on the lower time frames. And what we want to see is a range creating a initiation out. Then we want to see a mitigation of this range and then a continuation. So that's why we actually use this inside bar candle indicator. So yeah, I marked this supply zone out, and then in this case, I didn't go to 1 minute time frame for the entry because the 1 minute time frame, as you can see, was really not clear. So I actually executed. Wait, so wait, we actually will replay it till here. So yeah, we have this 15-second time frame. And as you can see, there is much more clarity. So we actually, I will not go back to the left, but we, as you can see, sweep the liquidity barely, and then we have this aggressive reaction to the downside, which then breaks this demand zone. Okay, so there is no clear mitigation of the 15 seconds extreme order block, but there is mitigation of this whole range at the equilibrium. Oh my god, I thought that was Fibonacci. Yep, equilibrium. See, so this is where I have set my order, and as you can see, it then melted. Once again, if you are into the trade and you see that the demand doesn't get broken right away while the supply is in control, ask yourself why. For me, it means that the price is building liquidity that it wants to sweep, and then as you can see, it melts. Once again, we have this demand. The price shows reaction. Why? Supply is in control. That means that demand builds up liquidity. Demand builds up liquidity, sweeps it. We have the supply to demand flip. Then price does come back to this demand and once again goes lower. Okay. Once again, we have here, let's make it to the left. Okay. So what do we have here? We have some accumulation of liquidity. We then sweep it. We then impulsively push to the downside, retrace, barely tap into the order block, and then once again showed the great reaction to the downside. Okay, so yeah, if you didn't really get it, the entry criteria is with a pro trend trade is to wait for the price to come back into the POI and then to see either 1 minute chalk or 15 seconds chalk if 1 minute is choppy and not clear for me. But sometimes 15 seconds is too risky because there are a lot of gaps in there, and you know the initial reaction on 15 seconds may be just a fluke. Okay, but the thing that you really need to understand is that the price doesn't know time and the time doesn't know price. So that's why sometimes it doesn't really matter in what time frame we execute. It is always about the knowledge and the psychology in the trading and patience, of course. So yeah, whenever it comes to chalk, by the way, I forgot to mention it. Whenever it comes to the chalk, for me, it is just enough to see a wick lower than the last high or low. Okay, so I don't necessarily need the candle to close um, both above and below the candle body. Okay, I don't need it. For me, the wick is fine. Um, so yeah, this was the short, which didn't play out for 23 RR, but it played out for I don't know how many is that, but I will check it. 17 RR. So yeah, this one is a great trade. Um, yeah, let's get out of the replay mode. Yeah, by the way, I'm really sorry for such a messy video. I didn't really structure the video because, kind of it goes better with improvisation, and I want to be as genuine as possible because, you know, uh, it's always better to hear and to look at the live emotions, and yeah, I hope you will benefit from this video. I'm pretty sure I have forgotten to mention something that I have actually said on the beginning of the video, but I will uh, definitely film another video in the shortest period of time. Okay, and as I have said, I will post this schematic into the group. So yeah, I hope you liked it and you will once again benefit from it. But if you have some questions, feel free to ask me. Feel free to reach me out, and yeah, have a great day. And we will see you. I mean, I will see you on Monday when hopefully new week brings us more profits, more qualitative setups, and yeah, trust the process and have a great day.